Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix. We're back.
Mr. Marco, did you miss me?
I did. Did you miss me? Not sure, huh?
I did. I saw yesterday things picked up a little bit too. I was looking around, and it's crazy. The market goes up every day, and then today it's down. It was down a little bit. I look now, it's down small. 18.18%. The SPY's down, and yet I bet at some point it felt like a crash. It felt like, oh my god, the market's crashing. Which shows you is like, how fast things can turn, and how you should feel when the market's moving. You look at it and say, well, the market just moved a little bit, but from the top, from where we were this morning to some of these stocks, really fell hard. So it's important to register that.
Even the
when the
IQ,
big wave comes, wave comes. Just be careful. Just remember what I'm saying. That's a little wave. That's just like a little ripple. So anyway, Go ahead. What were you saying?
Yeah, that's something definitely we're going to talk about, some SPY puts, but also IQ. I got in a little bit late. I wasn't 100%, and it hit a pretty high number, but then it just went down with the market.
Bit late. Yeah,
a little bit. So I don't know what was the average price people got in. What was the how much?
I think we had it should have been 100%. Some people may have even got 150% today out of IQ. At the end of the day, it hits right around there. Look, it's not magic. I don't know exactly why it went down the way it did. It was probably down with the market. However, I will say there's this magical thing about 100 to 150% that even the top guys in the world, they make 100, 150%. They got to take some off. And so if they start taking things off, whether it doesn't necessarily have to be in the option, it could be in the stock. It's something to consider. So, everybody has their own plan and their own way they like to play it. You got to get over that 100, 150. But these guys are not also. They're also not the top guys in the world. They're not waiting for 400 or 500% returns at every time. They're taking stuff off. And what we're trying to do as a plan is essentially front run that a little bit and get that on the tape, get some money off the table. So so IQ was a good one today, and still has, I think, a lot of potential. But we want to take off as it happens, and it goes for all of these trades. It goes for even the Pinterest, the ATVIs of the world, the GMs of the world. GM's down a little bit. They said, which is interesting too. We'll talk about it in a minute. They said that their earnings might be a little bit light, not because there's not demand, but because they can't make these cars. It's just chips. There's no chips, right? There's a chip shortage, and so that will affect earnings. Everything has chips, so that will affect earnings. So that's something to think about. But let's look at one of the chips that we like to talk about.
AMD.
I always like talking about this AMD, right? Because it's the big puzzle. It's the big puzzle. Let's take a look at the chart first, just to get an idea. Let's see it daily and AMD. All right. So let's look at AMD. We see the story. We know this. We've been talking about this for a while here. Stock is up, going back. It's had a tremendous run. It's in a fight against Intel. It has a great product. Maybe a better product, and people say it is better product. Distribution of their chips is a little bit different. Intel has an advantage in actually getting it into the stores, but AMD is catching up, and they don't make their own chips any longer. I don't believe. I believe that they're more designing, and they outsource their chips. So you have this situation where the stock is digesting a significant move from 50 all the way up to 90. Close to 100. There were call buyers here. We saw the Intel CEO came in. Stock has traded not so great since that announcement. And then you have it here fighting against this. This is going to be the 50-day moving average. So having a fight here, it dipped. It's now trading above, and we're at 92 and a half. I can tell you that we've been seeing there's been call buyers since Friday, yesterday, and today, and they're coming back to the name. It's a great stock, great CEO. They have a lot going on. There's a chip shortage. I always, when I think about a chip shortage, I think, okay, once they make enough chips, then everybody's going to want to buy. So should you kill the stocks because they might miss an earnings? Not because there's no demand for their product. It's simply because there's no product, right? There's a little bit of, are we looking to just make the quarter, or is this structurally bad for the company? I would say that, high demand and low supply and the inability to create the chips that are needed, as long as the whole world is in the same situation, then it's neutral for everyone, and it should be okay. So people are buying these AMDs, and it pops up on the UOA board. Stocks up here again, and we see here 84.16. Let's take a look. IV's up a little bit, but let's just take a look at what we're seeing here.
Okay.
So AMD, this one looked a little bit. Now, earnings are not, there's no earnings in the next 3 months, so this doesn't capture. Their estimates are somewhere late April, I believe, or early May for earnings. But these are starting to trade. Again, the March is the ones that we saw trading. So I'm a little concerned that I'm not going to be able to figure out for sure. We know that there was a lot going on here in March. So I'd like to see April 1st just to take a look, because I already know that that's going to be difficult. And then in April, I just see sporadic trading, which doesn't mean that it's terrible. It just means that, we might not get the full picture here, except that overall implied volatilities are going up here. The stock is trading up, and calls are more active than puts. And so it's likely people are buying calls in general. Okay, now to get to the specifics, February 19th and February 12th, there's a lot of activity here. These 95s I saw earlier. Not sure what to make of it. People might have, either dumping these things as the stock has moved up and taken some profits, and then there's maybe half the people that are getting in. Here's a 10 lot right at the peak, it looked like. So let's see, maybe we can see what that was. Right around 10. No spreads, 46. 4,192 offer bid. So let's go by time here. When things started picking up, 10 o'clock, 169, 174, 175, 190, 192. So it looks like somebody came in to buy it, was bidding, buying, bidding, and buying. And by the time, and by the IV, it started at 44.7. And by the time we ended near 10:05, it was 47.7. So it looks like a buy of these 10,000, with the stock going up, trading up. Right after they bought it, they paid up on the vol. You see the stock came off here. That was with the whole market. Okay, so that was with the whole market here. So this move sort of shattered a little bit of what was going on here. But then the stock has regained that level, and it looks bid. As far as the stock goes, it looks bid. And, the chart, I would say this, we've been liking it here, and here without actually committing to it. But you could see that this looks like this is a good stock. It's, however you want to slice it. Okay, this is down right here. You see that?
Yep.
But overall, I mean, this is a stock with a lot of volume pushing up here, and then call it somewhere right around, 98. Okay, so this is trading in its range. It's on, if we divided this in half, it'd be somewhere around here, it looks like. So we're at the higher part of this range. It's dancing around. The 50-day is moving higher. This isn't over here. This isn't like a crazy peak, right, in the stock, right? It doesn't look like that. You agree? Right? Just by visualizing. Yes. It looks more like this, if you broaden it out, it looks more like a move up and a digestion of this. Now this could take, it's already taken 6 months. It can take another few months, but I can imagine that when they make an announcement, says, yes, we're getting back on track, and Taiwan Semi is building this new factory and whatever, we're back, and maybe it takes another 60 days or however long it takes, this stock could actually maybe make its next move. I would probably say, to be on the safe side, probably closer to earnings. And earnings looks like to me, again, it's in May, June. And you see here, what do you see? You see this ATM IV, the implied vol? You see how it's creeping up, and you see how April 50, 59, you see June, which is the highest here. June,
yeah,
right?
June.
It starts getting because June has the earnings. June is going to have the next earnings. So it's naturally going to be higher. So when you see, this spread between 48 and 52, that's probably a little high from me. Meaning, I'm sorry, the spread is low, 4 points. Remember we looked at Pinterest and the spread was like 20, 30, 40 IV. So this is telling me that maybe the relationship between March and June, this being 3 or 4 implied vols, maybe they've pushed this one up. This 57,000 has pushed this one up a little bit too high. See how this is 2.2 plus, and the Junes are how much? 1.2 plus. So this has moved up a little bit more. Now it's doing that because there's people buying options. But I think if you went back, a few days, you might have seen this spread even a little bit, maybe slightly lower. As you get closer to March, you're going to start seeing this hold, this level hold, and you might see this March come off a little bit, and that spread widens. Same thing with April. So there's always this. That doesn't mean just by looking at this you can actually make money. But what it means is that I'm trying to guide you into, sometimes you could see whether or not paying for the extra month is more valuable. So when I see this here, I think, I'd rather pay for 2 more months at the same volatility than the next month and a half or whatever it is now.
And does that also mean that the prices might not be as vastly different when the IV is closer?
No, they're going to be different. This is just sticking into a formula. They will be. Well, we could just let me just show you. So
what if in June it was 80 and then there was 40? The prices would probably be higher.
Oh, then they would be. You would see probably a lot different. Yeah, the Junes would be very high. The Junes would be, the June 100s are 8 3/4 now. So they're not giving it away for free there. You see that?
Right, of course.
8 3/4, whereas the Marches are going to be 3 and something.
Yeah,
308. So 308. So you see a vast difference, but it's this number. Now, if this number was, sometimes they take this number all the way up because they buy and not caring about implied vol. This number goes to 55 or something, then and this stays at 52, then I would definitely rather do the Junes to this 55 because this has the earnings. Unless there's a big event coming and then people are going to be playing that event. But with no event, it always should be looking something like this. The earnings month, 52 is the highest.
And what are the targets on these?
So let's just take a look at what they're paying here. And the March, you're looking at 110, 112 as a risk reward. So probably 113, 115. So basically this is, it's, if you think about it logically, this is $7.50 out of the money. Okay, $7.50 out of the money, and you got to pay $3. So the probability of getting there is, let's call it 25 to 30%, right? It says 29, but using the Black-Scholes, it's a model, so it's 25, 30%. You're talking about 3, 4 to 1. So let's call it 4 to 1 is 3 to 1 would be 4 times this is 12. 4 to 1 would be 5 times this is 15. So there you get your 112 to 115 is where you're going to need. So 4 times 3 and 5 times 3 is, that's how you calculate 12, and 5 times 3 is 15. So 115, and you get the pointer here. So this, to me, without an event in the next 5 weeks, man, it seems like I'd rather buy this stock and sell those calls. Just to me, unless there's people know that there's some sort of investor meeting. I haven't looked recently to hear if there's an investor meeting within March, but it just seems a little bit high. Could go up, but this is just 5 weeks. There's a there's a national holiday, President's Day, coming up soon, I believe. And is it this Monday or I think this Monday might be a holiday. This Monday or next Monday. One of these Mondays is a holiday, and so you don't have a lot of time in March. And this isn't. It's not like it's super cheap. AMD is a very thick stock, so I don't particularly like reaching for the 100 calls here for $3. That's just me. I'm looking at time. I'm looking no event. I see a chart that is bubbling here that looks like it wants to try to shoot up. Right? If it can turn here, get to 98, that'd be third time's a charm here to try to push up. You can get 74 to 98 is, let's call it $24, 24 plus, let's call it 85. So you can get 109 on a push. On a breakout here, I would expect 109, 110. That's what I'm looking at. But can I get that through March? And so that's the dilemma. Now I want the earnings. If I can pay for the earnings in AMD at $3 in June, I would love that, right? In June, I'd say $3 for June and the earnings. They're not going to give it to you. They're not going to give it to you. They force you because they know earnings. They know AMD could trade a lot higher, and so they force you. They push this dollar up. So this is the type of back and forth we're going through. I'm looking for, give me a down market. Maybe one day a SPY moves down and AMD starts pushing back again towards 87, 88 on a, then those hundreds in June are going to be, closer to maybe 5, 6, but maybe there's something else to do that's a little bit different, and maybe we can play something else here a little bit different. But they don't give it away for cheap, and meaning aesthetically cheap. You got to be thinking about big moves on these things. So that's what I'll say about AMD, and we can go to the next one. But I think it's important. What we're doing here again is going back and looking at history, and we're going to do that. I plan to do that on a few others. There's history to all this stuff, and because I'm speaking about it on the podcast, that doesn't mean we're jumping in at winning picks. We're doing just 2 to 3 trades a week and trying to be very methodical in what we're doing, and not reaching. And frankly, I don't like reaching on these 100 vol names. That's just 100. They're not even 100. Some of these names are 250 now. It's very, 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 very difficult to consistently be right on 250 implied vol names. So let's go to actually another one that I like. I like what's happening in the sector, but I like this trade as a clue here is FCX. You see this FCX here?
Yep.
FCX trading 31.78 commodities, copper. Okay, so 31.78 down in a quarter, 177 vol calls to puts. Starting to be at this ratio. It's a little bit higher than it has been in the past. Trading 1.9 times normal as of right now, and volatility is up a little bit. So commodities have been ridiculously hot. This is a good stock here, but what I'm looking at here is a stock that's gone from 10 to 30 in 5 months. Okay, from 32 to 25. 25 makes a sharp move. This to me starts looking like a MACD diversion here. Okay, you see this large move all the way up, and it's playing around, and it's going on. When it makes this move here, right here, okay? So you see this and this?
Yes.
Let me maybe let's go to the, I'm always looking for these types of things for weakness. So when it goes here, right, and let's pull that all the way down, okay? You see that, MACD? Okay, so price goes all the way up, MACD's here. Now I'm watching. I say, okay, MACD's just made a significant move, right? A significant move straight up here from where it was, this range. And what I'm looking at is, say, how's the stock going to react? How's the stock going to react in the next 2 weeks? Because when it does this, now this is a very bullish chart. It's very bullish. It's going up every day. Up, 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 up. When it comes here, how's it going to react? Because I know that MACD is probably going to come down. So this MACD is going to come down, is my thinking, after this large move. And how's it going to react? Well, the stock holds firm.
Yep.
So the MACD actually goes down. So it's almost like reducing, like it's like when you're jamming the car, and you're like, and all of a sudden you let go a little bit, everything subsides a little bit, right? Everything, that the barometer starts going down, speed levels start going down, and it's like taking a break, right? So That's how I think about this. This is a rev of the engine. And then you know what? I'm going to let go of the pedal. I just want to see what happens to the stock. The stock doesn't move. It tells me there's real buyers right around this level. Sure enough, stock takes off again. MACD takes off again. Now where we're at? Now we're at a much higher level. We're at a much higher level. And the MACD is at a higher level. So what does that tell me? That tells me it's pretty good. There's still a lot of strength in the team. It's really good so far. It's, you know, this shouldn't just be a crash from here. It shouldn't just crash down, right? I'm looking for, which is what you're trying. So I'm going to watch. I'm saying I'm going to watch from here how it reacts to this MACD going high. And over the next couple of days, I see a lot of weakness. Okay, so we get this weakness, which coincides with the MACD, which is what you would expect. See, when it happened over here, I was expecting the stock to do this, but it didn't. It stayed the same, and so the pressure went back up, and the stock traded higher. Now, the MACD's come down. I expect the stock to come down. It does come down. Okay, this would be when you get to this level again. In this sort of thinking, this would sort of be a nice entry, 25, 26. I missed it. Frankly. It was too fast. It was here to here within 2-3 days. You know, I missed a $3 move in this thing, and now I have to wait for the next. I'm waiting for the next sort of move up. Now, what do I think? When it's here and it starts moving up, I'm thinking, okay, I am watching this level. Okay, I'm watching this level. And specifically, the setup now is I'm watching for a MACD. I'm watching for a high on the stock, and I'm watching for not going to reach this high. Does that make sense? If I can get a stock price that goes straight up and then the MACD doesn't follow, that becomes a MACD diversion. Are you there? I think, Marco, I lost you. I think.
No, I'm here. I was just
okay.
You couldn't see MACD from my head, so I moved myself.
Fine. Okay. I want to hear you breathing. Okay, because I'm not looking at you. So the price goes up here. It creates a new high. Yep. This was a new, over here was flirting with it. We're off a little bit here, but today there was clearly a new high. The MACD has been going up. We're revving the engine again. We're trying to get it going again. But this time the MACD doesn't reach the high. You see, high, high. Now, if this turns and starts going this way, okay, that's really weak. And my expectation is that it should probably start going down towards the 22. It tried to do it here. They took it back up. And then that's it's like a final gasp here and saying, you know, the car's going to put and collapse here. Not completely, but I'm expecting it to get somewhere around here is where everything. If it doesn't, if the stock sort of holds right here at 39, that becomes bullish again, because again, the MACD will sort of reshuffle and it'll re-go, you know, this MACD gets back down to 0, right? And the stock doesn't go all the way down here. That's really bullish. So this is the ebbs and flows. This is, again, I'm doing this to show you how I think about the universe and how I think about specifically about technical analysis. But everybody has their own way of looking at things and weakness. Some people look at, you know, they'll look at the RSI and they'll see the RSI high here. And look, the RSI is not high here. So you get a little bit of a divergence. You get a little bit of a divergence here with a high. This is the high price. And look at the RSI. It's not as strong as it was when it was reaching highs over here. Does that make sense?
Nice.
So
yes.
I would not recommend just selling because this is here or this is here. I think you'll blow yourself up. Okay. So just looking at RSI and going, RSI is high, sell. You'll be selling all the way up. Sell. So right. This, I don't recommend just looking at that. Even MACD, I don't recommend. What I recommend is common sense. The stock has made a huge move. Now I'm starting to pay much more attention to these large moves to new highs and how it works. And I'm looking at this, exactly this sort of setup. So this to me is a MACD diversion. If it fails the 32 level, it would have went to a new high and the market rejected it and moving down here. Now, same thing over here. Market, we talk about the V. Market, it rejected it here. So there's a battle between 25 and 32. This is the battle right here. 25 and 32. I suspect that if it comes here, I would be expecting it to start breaking through this. And you can buy options, say a put option, give it 1 or 2 days here, hanging out at 31. You know, it shouldn't hang out there too long. See how it didn't hang out long? Yep. It should be sort of, if you get a move down here and then the next day you get to move back to 31, you know, probably a decent level to say, all right, you know what? I want to jump into a put for the next few days and see how it reacts. But it's been rejected here. This is a rejection today. It's just got to hold after, but you're talking rejection after a long move up. Okay,
Right.
since April. So, all right, does that make a little bit of sense?
Yeah, that was great. That was great.
Okay, something to think about, something that I want you to understand. Now, what's the option trade? Now that I'm looking at the trade and I say, okay, I got my opinion on the stock, right? Now let's go back and let's say, okay, let's look at the options. Okay, so we're going to look at the options and we're going to say, did I pull it up already here? Okay, so we'll look at the options and we're going to say FCX, what's trading? So we can look at March. Let's see, March. Okay, so we got the 32 calls here. Again, open interest, 24,000. It's going to be difficult. I don't know what this is here, but it would be difficult to figure out exactly what that is. Let's take a look at the Aprils. And we see something here. So just remove this here. I see this 33,000 and then I see 18,000 here. Okay. So 33,000 puts and 18,000 calls. What do I think that is? You know what I think that is? I think that's someone that's buying puts and selling calls. And that's called a collar. Okay. So people, when they're selling options to institutional investors who just sold out their billion-dollar company and they own stock, they got company A stock and they sold their company B. The investment bankers are saying, hey, why don't you collar your company A stock? Okay, so what does that mean? It means buying puts, selling calls. Collar, right? Mm-hmm. You're collaring potential gains. You're ensuring potential gains, but you're giving up some upside. So if this costs $1.65 and this costs $1.40, and you did it 1 versus 1, then you would only pay 20 cents and you would protect yourself at 28. Sounds pretty good as a trade if you've held it from 10 to 30 and now you're able to protect. You can still get upside until 37, but you're going to be protected at 28 all the way down. Okay, that's what I think. I'm that's what it looks like. So we can just look now, and you see over here this trading doesn't have spreads, but doesn't mean that it's not a spread. So stock trading higher, IV going up and puts coming in here. It looks like it coincides with sort of this put buy.
Mm-hmm.
Okay, so it looks like this is going up and the stock's going down. It would make sense that they are buying here, buying those puts, and to finance those puts instead of paying. Let's see that again. Sometimes this is double counted, but let's call it 20, 30,000. Which is a lot of stock, right? Could be, let's see what the 28s are, 37. So let's call it on a million shares, on a 10,000, every 10,000 options, about 350,000 shares for sale. If they bought 30,000, that's a million shares for sale. That's part of the reason why the stock is coming off. But they're collaring here, they're buying this, and I think they would be selling this. If they're doing it this is 16,000 on the open here, 5,000 within the first 8 minutes, 5,000 and 11,000. So they might have marked, they might have not missed, and I'd have to look at this a little bit closer, but they might have missed, somebody has to mark this, so they have to be marked as spreads. But this looks like someone doing the same thing, or maybe at different times. Maybe they sold these and then they bought these because it did trade at different times, or maybe there is a connection between something going on over here with this 18,000 here, probably a little bit more of this. You see at the same time. So it could be someone that actually bought these back. Maybe they bought these Marches back. Okay, so they had sold them before, and we have to look at the history, but maybe they sold these before they bought the Marches back. They're going to now sell the Aprils higher. Okay, they sell the Aprils higher. Let's see.
Okay.
16,000 here.
So my question now is this one
looks
person?
Like they might have shifted that. Good. No, I think it's with that type of size at the same time within the first half hour, I would suspect that it's the same person, shuffling around, figuring out. It's probably that they started off, they have a position. It's probably this. They have a position here. They have a position here and here. You see, that's them, or that's one of these guys. They have a position, and the stock is trading. Right in the morning was trading up. So they're basically saying, damn, I don't want to be in this position. I don't want to lose my stock at 32. The stock is trading very bullish up at 32, but we want to start protecting. Can I get out of this 32 right now, go out to April, move my April? Again, I'm going to shift my risk reward by moving 32 to 37. And then on top of that, I'm going to actually come in 20 minutes later and say, yeah, let's go buy the 28s too. Okay. So to me, that's what it looks like. I was short. It looks to me like I might have been short. If it's me, I might have been short the 32s in March. I'm short these. I got to buy them back. I don't want to spend that money to take a loss to buy them back because I own the stock. So now I just want to sell the 37s. It cost me a little bit of money, and then I want to spend a little bit more money here to buy the 28s to insure myself. And now I have my position boxed. Let's get out of this for a second. We saw what we were saying here. I have my position boxed in FCX or collared up here 37 somewhere, 37 and 28. And I just told you, where did I think it's going to go? If this is the turn, it can go right down to probably around 20, 22 to 20, right around somewhere around here. I create a box for you somewhere around there. Okay. So that's how I'm looking at the world. And if I just, without even seeing the options flow, I did what I did to show you. And then when you look at the options flow, it's basically someone kind of protecting this window right here, right? They're protecting their position between 20 and 30. If they bought it here and it went straight up, that's how they manage it. That's how they would do it. So it makes sense to me, buy put, buy, sell call, but they might have sold those calls already. They might have sold, and I'd have to look at the history. They might have sold the March 32s when the stock was over here, and now it's going straight up. And they're like, oh, you know what? Let's buy these back. Let's sell the 37s and do this type of trade. Okay?
Cool.
Make sense?
Nice. Yes.
Okay. So that's FCX. The next thing that I would see is, because we're talking about commodities, is AA.
Yep.
Alcoa. Okay. Another stock's had a big run here. And you're seeing, let's just look at this and analyze this real quick. Okay. This to me is pretty choppy. But actually here's a good thing to look at. Okay. So we're looking at this, right? MACD goes up, right? MACD goes up, high in price, high MACD. So I'm going to watch. How is it going to go for the next couple of weeks? I want to see the MACD come down because I expect that the MACD is going to come down. That's what I expect. Now I want to see what the price does. Price stays firm a little bit. Price stays sort of firm here. So again, there's buyers. Okay. Now what happens? I'm still watching. Okay. MACD's come down halfway. I expect it to try to make another move. Is it going to go up here, MACD, or is it going to kind of end up over here? Turns out to just go this way, right? Not that much. Okay. And what happens? The stock trades at a new high. Very similar to FCX.
Yep.
Very similar to FCX. Trades a new high, starts showing some weakness here, breaks this level, which it broke to, call it this level, whatever, right around here. Breaks this level, and the MACD it's starting to go down here. This, again, is a MACD diversion. Okay, you see what I just did there? MACD diversion. This is going to go down, and it's going to be sort of like 21 to 26.5, call it 16, 17. So could also start looking at something like this to, kind of like this gap area, called a dollar range. Okay, it actually comes close. Hits 17. So, this is sort of, again, same thing. So I don't particularly like this chart. To me, this type of choppiness, yes, it could go straight up, but I just don't like the choppiness. I don't like it that it's trading below the 50-day. Recapture 50 to 23. Okay, maybe I start liking it again, but this choppiness here like this hurts a lot of people. Doesn't get investors excited. Investors like to take control of the stock. They like to buy it, make new highs, hold it, make new highs. When it's breaking them here and it's doing this, this is a little volatile for people's taste. Again, we look at here, and here. The RSI is down. So to me, this is showing some weakness. So if we let's look at AA options. this clearly it's the April 15s that are staring at me. Somebody's buying the 25 calls in Alcoa. Okay, is that bullish, bearish? Okay, we can look at it. It looks like it's a buyer. Looks like they're buying it in the morning. This is bid here, but I think the stock actually was moving higher in the morning, and I'm not sure, to be honest. I mean, it looks bid. It looks like it's bid. I don't see. Let me phrase that. We're talking about April options in a stock that has moved from April options in a stock that's moving from 7 to 25, and just traded 26. I'm not sure people are excited to sell the 25 calls at $1 and change. I'm just not sure that people are excited to do that. I do see that the implied vol went to 71, 72, which is up 6. So I would expect that this is a buyer. And what I also expect is that I see that the stock is down on the day, and so I suspect that someone is actually saying, you know what, I'm gonna buy these Aprils for $1.25, the April 25s, 12,000 times, and the stock was just 26. So, it could get there, and at least I'll be long a little bit. But in fact, I'm probably going to get rid of some more stock up here, and I have about 1 million shares possibly that I could sell. So that's good risk reward thinking, right? That is how they think. I could still stay long the stock. If commodities go to the moon now and it goes to 30, I'll be long to 25 calls, and I got ample time to start making decisions as it's going. And if it doesn't, okay, I'm going to lose $1.25, probably be out by 50 cents. I just get out of it if the stock trades lower in the next few weeks. But again, risk reward. So I wouldn't jump on AA and say, yeah, I want to follow this AA right now. There's 12,000. Look at that UOA. Look at that. It's unbelievable. It's definitely a shark. It is a shark. They are probably paying up here. They wanted to get 12,000 in. The stock, though, is telling us, the technicals are telling us a different story. A little bit more volatile here. There was this MACD diversion, and $1.25 just doesn't seem very interesting to potentially sell in these wacky, crazy names, unless you just want to take a flyer and you actually want to sell some stock. So the stock is also weak. That's another clue. So just to try to give you an idea of, it's obviously something I'm looking at. It's now on the radar, right? And you're looking at this stuff and it goes down as, all right, we're going to see how it acts. But, under the hood, it doesn't look like it's so strong now. Is that fair?
Yes. Nice. Awesome.
Good. I'll tell you the next one that I wanted to just give you a story. Okay. So we all know the story. Okay. ARK and this Carrie, what's her name? Carrie Wood or something? What's Woods, this woman's there? Kathy Woods. Yeah, Kathy Woods. Kathy Woods. So Kathy Woods, first I would say she gives her portfolio out. So you can go online to ARK Investments, and you can actually get everything she's doing every day. They show you what she's buying and selling. So what's happening here, which is in a way, it's very dangerous. And that's why I want people to be aware. But what's happening here is that, she's long all of these stocks, including with Tesla, all of these. It's the innovation fund. So she's long basically a lot of stories. Okay. And what's happening is that she's getting long. She's been right, dead right, for the last 4 or 5 years. Momentum, it has been the trade of maybe the century. It's going to be the trade of the century over that 5-year period. And she hit it. Okay. She's called Tesla to 2,500. She's called Tesla to, at all marks, she's done well. The problem is now success. It makes it very much more difficult going forward because so many people are putting money in her fund. And when they're putting money in her fund, she has to buy stocks with that money. Okay. So as she's buying stocks, so she puts money in the fund, she buys stocks. You get the email at night saying she bought these 10 stocks. And you say, you know what? I'm going to buy those 10 stocks. I like that stock. I start looking. And everybody's doing that. Millions of people are doing that. And everybody's talking about what she's buying, what she's selling. And when she's buying these stocks, she's pushing them. So she buys 50,000 shares or something. All of a sudden, 1 million people buy one share. It's 1 million shares of the same stock. So you start creating this upward momentum just because she's buying. You know who else is buying? You have a lot of quantitative computers, quantitative traders buying, and they're buying all this momentum. Everybody's in a momentum trade. It works. They keep pouring more money in. It keeps working. They put more money in. This is the concept that George Soros wrote a book about, which is basically buying begets more buying, right? The problem is when you get a shock, how will all of these names work when you get into a shock? And when you get into a shock, correlation, if people don't understand what correlation means that, today they're trading, something trades up $1, something trades down 50 cents, something trades up 3, one other stock. All her names are trading randomly, generally up because the momentum should up. But in the event that the market turns and correlation goes to what happens when not in a crash, it doesn't even need to be a crash, but in a sharp move lower, correlation tends to go to 1, which means all her stocks trade the same. So they will all trade down 10% or down 15% because it's just whatever it is, it's just sell it. And that's where you got to really be careful in these particular names. Well, I have been looking at the options, and I can tell you that the individual stocks in her portfolio, many of them are trading 150 vol, 100 vol. When everything turns into a disaster, the ARK options might trade up significantally. Okay, just the premiums, the vol might trade up. Right now, it's been going up for like 60 points, 70 points in a row. And I'm not calling a top on this, but what I'm saying is, on a risk reward basis, I would believe that somebody's got to be thinking the same way I'm thinking. And what I saw today was, maybe somebody's saying, you know what, the downside in ARKK is perhaps too cheap. Okay, so somebody says, I'm looking at June. When I look at the June, these 120s, they're 450, and you're like, man, stock's going to go down 35. That's a 20% move down. 20% move down in ARKK in 3 months. Well, this thing could move down 6% in one day. Look at Tesla, which actually leads me to the next name. So that was the setup, right? And I'm seeing someone buy these. Now it does say a spread, but this spread could also just means it happened with stock. Okay, so it happened along with stock. There's another trade here that we can look at instead of going through every single one. But when I see someone buying that low option, okay, and it says spread, but it could be delta neutral with stock. Sometimes that could be someone that's saying, if someone comes to me, if I was making the market for them and someone said I want to buy 18,000 ARKK, I might say I don't want to take the risk on 500,000 shares of ARKK. I don't want to take the risk. I actually have to sell you the puts, and then I have to go short stock, and I might put pressure on the stock myself. And I don't want to do that. So what I will do for you, though, because you're a great customer, Marco, and you want to buy 18,000 of these, I will offer you 18,000 of these options with stock. That means you'd have to buy those puts and buy stock, and I will sell the puts and short stock, and I'll give you a great price. Okay, so that trade goes up. You buy the options, and you bought, say, 500,000 shares of stock, and then you go out into the market and you sell 500,000 shares of ARKK. Okay, to get rid of your stock that you just bought from me. People do that type of trade. And so when I saw that trade go up, it happened to go up, let's see, right at 1038, and you can see ARKK right at 1030. Let's just take a look at the market right at 1038 was right around here, had already moved down. But that's the SPY. ARKK right here, 1038. Trades here. Maybe that traded, maybe that person was trying to get out of some of those positions right there, some of that stock. Okay. So you get a good price in the option, but it's on you to get out of your own stock. Okay. That's how some of these things trade as well. So what it tells me is that downside for someone, they're thinking what I'm thinking, that if this thing turns and correlations go to 1, those puts, they look like they're expensive now. They're going to be ridiculously expensive if the stock starts trading lower. You're not going to be able to buy them. And so that's what they're doing. They're playing playing the volatility a little bit more than I would think. And maybe they don't have to think it's going to crash. They could just set up. That's setting up for momentum lower. Okay. So, Go ahead. I see a question. Explain delta neutral, please. So that delta neutral, when I say someone is coming in and says, I want to trade at delta neutral, they're basically saying, we're going to take the delta of the trade. So in this case, ARK has this ARK trade. Let's go back here. This ARK trade has a probability of being in the money at 23, but the delta is going to be close, call it 25. So 25 delta, which means the hedge, delta is a hedge ratio for volatility traders. So 1/4 of 1.8 million is 475,000 shares. Is that right? 400 times maybe. 450. I don't know. I'm too old now to do this good math. So you divide that by 4, and it's 4.
Or 5, yeah, 450. Yep.
No, I want to say 450. Yeah,
Yep.
Yeah, we'll call it 450. I'm not gonna do the math right. So let's call it 450,000 shares on a delta basis. That means if again, so Marco comes into me and says, Felix, I want to buy 18,000. I want to buy 18,000 puts, and I say I don't want to sell 18,000 puts to you. I know you're a good client, but it's too dangerous for me because I trade everything delta neutral. That means if you're not going to give me the stock and you're buying puts, I have to short the stock. So you want to buy 18,000 puts? I can't make that market for you. I can't show you a price. However, what I would do for you is this. You can buy 18,000 puts, but you got to buy 450,000 shares of stock right here at this price. And I'll show you this price right here on the options, which is a really good price because I'm not taking any risk on the stock moving around. So when you buy it, you say, okay, I'll buy the puts and the stock. Okay, and we do that trade. I'm happy. And now you own stock, but you don't want those 450,000 shares. You just wanted the puts. So you say, okay, tell the trader in the desk, hey, sell me out these 450,000 shares. Trader goes in and sells 450,000 shares. And maybe that's what you saw at 1038. The market took that down. Maybe that's what, 450,000 shares of ARKK is, it's not a lot of money, but it puts pressure on a lot of these names. Okay?
Yep.
All right. Thanks. Good question, Mark.
Nice. Awesome.
Anything else?
There's
Another question, maybe?
Yeah.
Go ahead.
Let me
Go ahead.
Here. Okay, there it is. You see it?
Sorry for basic question. If I'm pretty bullish on a stock, should I go in the money, at the money, out of the money, and the deepness? Peacekeeper. So the on calls, Peacekeeper. I built the options chain for this purpose, for everyone to see which strike they should buy. You need 3 things. You're going to need a target stock price, you're going to need a time frame, and you're going to need some confidence level on your ability to hit that target stock price. You stick all those 3 things into the tool, and you're going to get some answer of where things need to be, or approximately. There's once if you what I would say is you can use the tool and it for the most part makes sense. But if you really want to get a deeper understanding, I would say I built the whole education around what we talk about, risk reward, about how the tool works and the logic behind the tool works. But the answer is really up to you. Which one should you buy is up to you. Whoever tells you that the answer is out of the money, in the money, at the money doesn't know what they're talking about. They might know about stocks, but they don't know if they can't explain it, then they really don't know what they're talking about. The one question that I always ask someone who says, oh, you got to buy the in the money. And then I ask them why, and they say, because out of the money is fool's game and nobody buys the out of the money. It's not true. First of all, the top guys in the world, they buy out of the money options. That's really what they buy. And then the second point is that the people who say in the money options and then say that they don't buy out of the money options, that tells me immediately that they don't understand what they're talking about. Because an in the money option, an in the money option, whether puts or calls, has an out of the money of the opposite option, of the opposite call or put. So if you buy an in the money call, what you're really doing is buying stock and buying an out of the money put. Okay, so you are buying out of the money. By buying in the money options, you're buying out of the money options. So this notion that there is an answer in the money, out of the money, or at the money, you have to get away from that thinking. It's not appropriate thinking. It's not the right way to think about it. You have to think about the three things I gave you, which is the target stock price, your confidence in hitting the target stock price, and the expiration. That's the only way that you're going to get a strike price that works for you. Okay. And that what works for you is trying to capture the edge you have in your process on your stock idea. That's what options are. Options are a leverage product on your idea. So we have to make sure that there's edge in your idea. And that's how this board works. Okay. I hope that helps.
Nice.
Good.
Awesome. Next up, you want to jump into some other stocks as well? We've seen some cannabis today. We've seen Tesla, Neo.
Cannabis. What is it? What is it? Let's talk about cannabis for a second. What is it to talk about? The stocks go up like it exploded. We talked about this 4 or 5 weeks ago, and they're talking about the news in the last couple of days. CGC guy said, CEO last night said that regulation might come in a lot earlier than 2021. They might decriminalize or reduce the level of badness, if you will, of marijuana and cannabis and whatnot. And we talked about this. We talked about at some point they're going to do this. The reason why these stocks don't have the power behind them is that that the big guys, we're talking BlackRock, right? When BlackRock gets in, the space explodes, right? They can't get in now because they can't hold their stock anywhere. They're afraid. They're afraid that what's the government going to, it's still a federal crime, and a Class A drug. So until they can get in, the stocks, they're not even going to experience their full explosion. People are getting ahead of that, and they have been getting ahead of that. And so when this guy says, oh, by the way, it might be 2021, oh, man, that means the big guys are about to be able to get in. When the big guys are able to get in, then it's, all hell could break loose on these things. If the market is good, if momentum is still there, if people have money still because things don't crash and things don't implode. So, do you wait until it actually happens and then you buy? Look, the stocks might be, CGC might be 80 by the time that happens. And then, yeah, maybe it's a little safer if you start seeing bids and BlackRock, but you got to wait to that announcement. If you wait to that announcement, the stocks will be higher. Right now, you're playing a game of wait and see, and that's what the market is doing. And the market is starting to incrementally. You see how the market is taking this possibility or probability that marijuana will get decriminalized. They're on a federal level. They're taking that, but when CGC says 2021 and they moved it in, the stocks all jump because everything is moving in, right? The time frame is moving in, so that gives a higher probability. But these things have been moving in for now. Stocks have been moving up for a couple of weeks now. They've been, starting to get bid. A Tilray, this thing moves up $10 a day the last couple of days. CGC has gone. We bought the 30 calls. If someone's still in them, geez, I tip my hat off to you. I mean, it's just like, wow, like to me, that's incredible. But these are huge winners. Which brings me to something else that people always ask me: Should I stay in? Should I stay in it after I get out? Should I, do what we see these guys doing all the time? Don't get into another full position, $20 higher. But if we're long from 30, we're really long from 20. We bought the 30, so we're long from 27. Stock goes to 45, and you're like, you know what? I can take out some big profits here. Sure, but you could also, if you wanted, take a small sliver. So if you had 3, you take a small, so you could take the last third out at $15, $17, $18, whatever it is, and then that last, you take another $3 out of the 18, and you go buy 1-2 month at the 50 calls. It's not going to hurt you, and it's we're trying to catch these trends. When we catch a trend, that's what we're waiting for. That's what we're trying to do. I get the same calls about eBay and ATVI and things that we've got this pop. It's, slow down a little bit with like the last piece, or take it off. But if you wanted to just throw another little flyer so you don't have to think about it, but you're still in the name, these things can actually go. And that's how you make the really big money, right? The guys who understand this, they say they understand what I tell them. When you catch a trend, man, that trend, there's no limit on where it can go. In this particular market, there really is no limit. So you catch a Baidu, a Billy, any one of these names, CGC, the marijuana names, we've had many names that have just kind of exploded. So trying to take a 50% winner is not really what we're trying to do. We're really hunting for that trend move. And we've had some nice moves where, GM, do you let go of GM just because it's down $2? No, this is a major trend GM is in, and GM is fighting to be a leader, right? So I wouldn't let go of GM right here. It's down $2, whatever, because they don't make chips and they're not going to make their. I wouldn't do that, So we're looking for those leaders in the space, and when the trend is going up and you're along that leader, man, these things start really catching fire. So so that's what I would say about the marijuana stocks. What is there to say? They're trading at 250 vol. I cannot get long. CGC, when we bought it, was trading, the volatility was trading much lower. But what happens is the market makers, they know a stock gets hot, sit it out, they just raise the vol. Oh, you want to buy options? 100. They still buy them. You still want to buy it? Okay, we're going to raise it 150. You still want to buy them? I get it. The stocks are moving. Raise it to 250. It's really hard to consistently make money buying 250 vol implied volatility options. It's really hard. Mm-hmm. Now, you can also lose your shirt if you sell them. So it's one of those things where I decide not to play, or if I could, I can do some sort of spreads. I like doing maybe a counter spread, and I teach that in the coaching, right? Where it's like, you can look at this and that, we look at Momo. We have Momo, and there was one where I offered, for the first time, I'm offering, hey, you can do this spread to give people who are more experienced on the premium a different look. And, I teach that in the coaching. I teach exactly what I'm looking for, how I want to do this spread. And that spread has outperformed the regular call, okay, because we saw a specific thing and we attacked it. IQ, same type of thing. There could have been a spread there to do, and that would have performed even better than 150%. So these are the types of things that we're looking for and that we're trying to attack. But trading marijuana stocks at 150, or there's another one that's always on here. We talk about it. It's always up there. Sundial, right? Top of the list. But you know what? It's a $2.65 stock. It is. Like at Options Geek, we don't do this. First of all, the at-the-money implied vols are 400. We don't do this. We don't buy. Okay, let's look at April. Let's look at April options. We don't buy. The stock is 268. Let's call it 250. Okay. We don't buy 250 calls for $1.60. It's not what we do. We'll just buy the stock for 268, and you don't have to worry about being right by April. Yep. So, your first question was, who's buying it? I have no idea. People don't know what they're doing. Not saying that they're not making money on it, and not saying that they can't, but I'm saying that you have now a window of, let's see, 9 weeks to be exactly right. And you might be, but you have a lifetime if you just buy the stock at 268. It's going to cost you 268 to own the stock here, or you're going to pay 161 to profit at 410. It doesn't make any type of sense. Capiche?
Yeah, definitely. For sure.
And I don't know what's going on there. I see it every day, and I think, man, Citadel must be making a fortune on this. Right. 1 million options trade. 1 million options are trading there. The bid offers are wide enough. Okay, they're wide enough, 14, 15 cents on some of these, even 6 cents. They're wide enough on 1 million options. And on top of that, it's 450 vol. Wow. They just, Citadel just might say, all right, let's just be a little bit long here. We could sell a lot of these. And then eventually, when everybody wants to sell, we're going to drop this number down to like 200. So, I don't know. It just doesn't make any type of sense. Pay $1.60 for 250. It makes no type of sense. But that's just me. That's just me. All right.
Now that you mentioned spreads, I want to ask you about our SPY spreads that we had and how to actually go about it. Because I was thinking, do I let the sales expire and this and that?
Sure. So when I give, I don't. It's the first time I actually ever gave a spread like as the trade. Okay, and that was because why? Part of the idea was we need something. This market is so. I'm looking at it. It's so strong. It's rejecting any move down. And so we need something there, right? We can't just be long calls. It's not what we do, right? We're long calls and we're trying to long puts. So in this case, I said, okay, I'm going to pick a good spread. I found a good spread that still would pay us a good amount if the market turned. But buying a $8 put in this market is very tough to do. Okay. You need a crash, really. You're talking about a 10% real correction. And that could happen. There's no doubt it could happen. But, I don't think the probabilities are there to actually say, okay, I think I know when it's going to happen. Here, it was, okay, I can get 4 or 5 to 1 if it does, go all the way down. Let me, this seems like a decent sized trade that I can look at. And the other thing that I'm thinking about is, because I am thinking about the portfolio and what people are long, and how I don't know, and this is what I tell you, I don't know what everybody's long. Let's just take it the big names that we have won: Pinterest, ATVI, eBay, DBX, IQ. Did people take it off today? Some people got in and probably were up 150, 60% on that, right? How did people take 1 off, 2 off of there? So I don't know what everybody has. That's why I tell people, try to see what you have. Full positions. How many full positions do you have? And if you have 4 or 5 full positions, you don't have to wait for me to say, hey, buy a put, because I'm always thinking about it, but I'm also thinking about the average and what the average is holding. Is it, do I count, are people still holding Rocket? Well, if you're holding Rocket, well, I'm not counting. Most people are not, right? It was a stop. It was a clear stop. Now, if you held 2 and you're still riding it because you only bought 2 out of 3, and I teach that, I understand. But that's not the majority of people. People buying 1, 2, 3 contracts, not the majority. So I wouldn't count like a Rocket. I wouldn't even count a Walmart at this point. I wouldn't count a lot of these. Twitter, we were long gone. Las Vegas Sand, these are stops. If it's a stop, it's off. If it's, if it's something that you should have gotten out of, in my mind, I'm thinking, it should have been out at half. I don't mind you riding Pinterest, but I wouldn't have a full position in Pinterest. You had an opportunity to get out, take some off the table. Same thing with ATVI. You got 175, 200% winner. Take a little bit off the table. This is how the game is played. And so in this case, I would treat a SPY put spread as any other trade. I always say that, as any other trade. That hedge is just like any other trade. I'm very aware when things get stopped out. I'm looking at our board and I'm saying, I like the names we're in. And I like that, the names that the options on the call side that they're in, that we are in, have some winning percentage already. Okay. And so, and some of them, I look at them as somewhat defensive. Some of the names that I'm in, it should go when the market goes down. They shouldn't go down that much. We're not playing the 150 vol game. I'm finding names that are sub 30 volatility where I can, build leverage on top of leverage. Does that mean they can get stopped out quicker? Yeah. I tell people, look, we had a trade idea today. Hasn't started off well, but the idea is that it's 5 months, and we're not here to make it in the first 5 minutes. If you can hold off, I wouldn't buy 3. If you're buying 3, don't buy the 3rd. Hold off. It's okay. There's 5 months to go. Okay. Market comes off a little bit. It's fine. We're talking about a stock that has a lot of leverage. You're talking about a name like MPC that we're long, has enormous amounts of leverage. We had a trade the other day that is still going. It's like the Energizer battery just keeps going. But, and most people didn't get in. But I can't help that. I can only help. Look, this is the trade I see from the day before. Tomorrow's a new day. Let's try to figure it out. Some people did. I watched the prints too. I'm looking at it. It's not something that I can control the time. I'm trying to give everybody a fair start. So in this particular case, SPY spreads. If it's a stop, it's a stop. And then look at the portfolio and say, you know what? Should I roll 1/3 of that up? Do I need something? And if you do, then put it on. Put on a 1/3. Go out 3 weeks. Find one that the way I picked 3 weeks, and maybe I don't like the 1 week. There's too little time. But 3 weeks is just about that magic number where you're going to get leverage if it's right, and it's going to protect you. One put can protect you on 4 or 5 trades. So right now, I don't see enormous risk. Although you better believe, within the next couple of days, I'm thinking about another SPY put, maybe even tonight. So I don't like what I see when I see Tesla down 5%. We talked about the ARK, but we also talk about the leaders all the time. When my leader, Tesla, okay, is down. Let's look at Tesla. When my leader in this, in these types of names is down, you better believe I'm considering something to do something here. Now, I've watched this very closely, and I can tell you today, I don't like this. I'm going to show you here what I don't like. just to show you something here. This right here is, and look, I'm not a charter, so don't kill the messenger here. But this right here is, almost like a diamond. They call it like a diamond. If someone's a chartist, again, like, okay, I'm not a CMT. I just watched a million of these trades, and I know that this is a pattern. Okay, and if it breaks this pattern going down here, it could go down like this. Usually, it's one of those things you wait for the break. It's either going to go up a lot, but you go up or down, but you're waiting for this sort of diamond pattern to break. So I see that pattern forming here, and it's scary to see now. I see, okay, 800. Man, this could actually go back towards 700, 650 level. Okay, so and maybe I think it's like 900 to 775. That's 1.25, down to 650 is right around here. Is that right? 1.25, 900, 650. Yeah, right here. So it actually is right where I thought it would be. So that's what I see. I'm just taking this and then I'm adding it to right here. Okay, so this height of the diamond. So when I see Tesla breaking down, what does that mean for NEO? What does that mean for, let's look at NEO today, because NEO has been trading well the last couple of days. So NEO is off a little bit. But what does that mean for NEO? Tesla getting hurt, what does that mean for NEO? And if NEO goes down, what does that mean for Lee and XPEV? And if XPEV and Lee go, and it just goes down the line, to Blink, to all of these other names that we've talked about. And again, we've seen even though the stock is traded up, it trades back down today. We've seen who I think is BlackRock doing that trade, in that put spread in Blink a few days ago. Okay, so Blink having a little bit of trouble here, even though it's moving up and down a lot. So that's what I would say about sort of like hedging and different sectors and whatnot. What else?
Nice.
Any other questions?
Awesome. Let me see. There's one question here that I'll point out, and it's this one from Jeff.
DKNG. So I would say, Jeff, that would be a stop a long time ago. I think the golden rule is we're not going to take anything to zero. We can't win this game taking things to zero. And so, on a DKNG, if these things are wrong, then they're wrong, right? And you let them go. I still think the stock is overvalued. I still watch it. It's on my list and I'm looking at it. I still think that these things, when they turn, they turn. Maybe the Super Bowl was the beginning of sort of, okay, that would, I don't know, Major League Baseball is coming back. Maybe that's, again, good for all of these names. But, I would say on the DKNG, I haven't looked at DKNG in a while. Got stopped out. It's sort of like I punish it and throw it in the corner for a little bit and say, I don't want to look at you. Same thing with Twitter. I buy Twitter puts, dead wrong at the lows, moves up. Okay, you know what? I don't want to look at it. So I'd rather take that off and not focus on it. And surely, here's one, and I learned this from my boss. My boss used to take sheets just like this, and he'd write down, he had all the technology in the world to look at his portfolio, 50 different ways. But you know what? Every morning he just had his coffee and he was looking at his sheets. And he would see something that was negative. And if it was negative, maybe for 2 days in a row, he would just like get angry and just look at me and literally just grunt over and tell me, XYZ stock, or DKNG, what is this? And I would say, I wouldn't even finish the sentence. Take it off. I don't want to see it. So tomorrow, when he picked up his sheets, there was no DKNG. It was a mental thing. It was his way of not having anything negative. He hated losing money like it was like the plague. And that's how he made a fortune, right? That's how he made $1 billion, right? He hated losing money. And so when there's something staring at you every day and it's losing money, it's like you're in the penalty box. Like, get out of here and get lost. So that's why we get out of these trades. Not only that, but we also know mathematically it's hard to win on those trades once they drop 50%. It's very, very difficult to get that 200-300 that we wanted. The math is simple. From $1 to 50 cents, from 50 cents to $2.53, that's a 500% move. From 50 cents to 250, 600% moved to $3. Sorry, 200 to 250. So it becomes very, very difficult math to capture. So that's what I would say. I would say DKNG is long past. Should be a stop. Try to manage those positions because we cannot win this game if we're not taking off some of those names that aren't working.
Cool.
Okay.
Good.
Cool.
Awesome.
Cool.
Thank you, Felix. I think we're out of time. I don't want you sending me
Awesome,
those
awesome.
overtime invoices every time, so we'll cut it off sooner.
Good. All right. Make
All
sure we get some likes and
yes,
do
and
your thing.
subscribes, please, people. Help us out. We really appreciate it. We've been growing, and we want to keep growing with you. So, thanks, and until tomorrow. Bye.
Take care. Bye.